Hey everybody, Day Trader Rockstar here, and this is the high probability watch list for the week of September 30th. The last week of September means it's the first week of October. That means we got job report coming up next week with some other interesting things. We have the beginning of the month. End of the month is tomorrow. Maybe a little window dressing. We'll see what happens with that. Let's talk about the HPS watch list. This is a special watch list that goes out that identifies stocks that fit the criteria for HPS methodology. The high probability methodology is based off of our combination of stochastic divergences, channels, and some other things that all converge together, the confluence of different indicators. Really, it's about the divergence. The divergence is money. It's money in the bank, and especially for swing traders, this is such a good watch list for swing traders because, swing trading is much more easier than the scalping and day trading. You have more time to be, less stressed in a position. You let the position work out, and it's very easy to spot the setups. Now, I just have this stock on a couple stocks just to show you the example. When I'm doing my scans, during the day when we're trading, looking for opportunities during the day to trade, we look for the intraday setups, these divergences, the channels and stuff. And remember when I talked about looking for a channel and a divergence? If you have the channel, then we look for divergences to cause those pivots. And when those pivots come, and that's what we specialize in. That's what we want to identify. It's very easy to put your stop in. And also to, almost look for that move up, So the downward move, divergence, move up. Downward move, divergence, move up out of the pattern. Again, each of the swing trades typically last over 7 days. It could go up to as many days as you really want to hold it. But again, every entry should have an exit, of course, based on the criteria for traders, for our traders. We use a lot. It's very simple to get in. On the other side, taking profits. The object here is to put your money to work only when it's ready to work. We don't want to be in a stock that's going long and is churning to the downside or just going sideways. We want to get into a stock after we identify our pivot area, or at least our divergence or high probability zone. We want to get in there and then get an explosive move out of it, and then take profits and then move it into the next stock that has set up the same way, so that we rotate into stocks on, using scans on the S&P 500, the Dow 30, the NASDAQ 100, any type of quality names that we like to use. It doesn't have to be in this, but it has to be a quality name. All right. So that's kind of the background of the watch list. We're going to get right in. I'm going to show you some examples. Again, this is the first example. It's just a UPS. This is some of the charts that I use on some of the presentations I do to show examples of divergences. And this is very clear. You see the pullback, you see the low, you see the lower low, you see the low, you see the higher low. Whenever you have that setup, that is our criterion, a quality thing. You could put a channel on here if we wanted to, no problem. Same thing here. You have the low and the higher low. You have the low and the lower low. You have the low and the higher low. You have the low and the lower low. Each one of these go higher, and overall this one went much higher. This one went very high, and this one kind of dropped due to probably earnings back here at UPS. And again, these are old charts, but this is the examples that I put out there over the years. I just want to show you some examples so you get a clear indication of what we're looking for. Don't want to hold these things into earnings. This is what happens if you hold. You're going to get your move on your divergence, but if you hold into earnings, it doesn't mean that you can't get a smackdown. Now, earnings season is basically over, but there could be other news out there. So just remember, bad beats do happen. It's nothing to be said bad about the system. It's just if you have bad news come out in the stock and and you don't expect it, there's not much you can do. So that's UPS. We go down. Sometimes you can look at the 60-minute time frame also for those divergences. But basically, here's the S&P 60-minute. I'm just going over some things. We're going to get right into the regular stocks here in a second. Here's Foxy. Again, just the little divergence is what we're looking for. The low, the lower low. There's three types of divergences. We have a pure divergence, which is a low and a lower low. We have a double bottom divergence, which is a low and an equal low. And then we have a relative divergence, which is kind of a closing price divergence. You don't have to have an equal candle or a lower low candle, but the stochastics have to give us a bigger, wider, big steep divergence compared to where the price is close to the bottom. And there's probably a lot of times you could actually pull out divergences out of this that I don't take. I like to get that divergence where our first low is under 20, our second low is above 20. Or a higher low is above 20. All right. Just some examples. That's even on the intraday chart. That's on the intraday chart. Let me see if I have any other examples on the daily charts. Here's Cabela's. And again, most stocks you'll find these in. Look at the Cabela's. Higher low, lower low. Big move. Higher low, lower low, higher low, lower low, lower low. Big move. They're just, low, lower low, low, higher low. Big move. Falling, little low, lower low. You can see that one barely there, but that's a really good big move. Very important. Even to this point here, you have a low and a lower low, and a low and a higher low, and you actually got a little move here. Not much, but a little move. That is how well these things work, all right? And that's what we concentrate on. So let's talk about what fits the criteria. Not every week you're going to get something that fits the criteria. That's just part of the process. You don't want to make stocks happen if they're not, or make trades up. You want to let the trades come to you. That is the most important rule. Have the patience, have the discipline to wait for those setups. That's my job, actually. That is my job, to get them to you. If you do happen to see them, please send them in. Very important that we share this with all our members. We'll work together, more eyes on it. But I do a lot of research. I go over about 500 stocks during this watch list. I'm not going to go over 500 with you, but I will go over 500 behind the scenes. That'll bring us to what we like, and I'll bring them up. Some of these might not be set up exactly, and I'll bring them up too for things to watch, things to watch going out. So let's get started with this, and let's just start off. Some cases I'll go through these and I'll see examples on, like Costco. Here was a beautiful Costco back here in August 2024. You had the low and the lower low. You had the low and the higher low above that 20. It's a kind of not the normal angle you see, but it is what it is. The fact is, the formula or the criteria requires you to have a low, the price to go lower, but the stochastics go higher. If it does that, if it's the criteria, we like to kind of add other things to it. We'd like to see it in a downtrend. In this case, you can see there's this kind of downtrending trade on this. Create that parallel line. We'll just drop it right around there. We could even probably put it down here, because that seems like it was a big drop, and then we came back and retested it, and then we kind of finally broke out of that. But again, the low, the lower low, the low, the higher low. Nothing there in Costco right now. As I go through my scans, I have a certain amount of stocks that I look at. I recommend everyone to make their weekly scan list for stocks. If you are making a weekly scan list for stocks you want to get into, you have time to go through them. Make sure you just have a good cross section of different stocks in different sectors. Everything from the banking, financial, tech, semiconductors, communication, healthcare, biotech, medical devices, oil, housing, you name, little, maybe just a cross section, a couple stocks from each sector. That way you have a nice cross section. Typically, if you find a divergence in a certain sector and you see, across the board, like Kellogg, General Mills and stuff, they all have divergences. That's usually a very positive thing for the stock. They all usually move together. This, again, you can see just the Campbell soup, the recognizable channel. It's very easy to see that, just a kind of a little downward move. They have the high, the low channel line here, but we had the low here and the lower low. You had the low and the higher low. Now we have the 9.3 and the 14.3. I prefer to see the stochastics on both of these. 9.3 usually will show it more. 14.3 is a good confirmation, but if the 14.3 is not there and the 9.3 is there, I tend to take it. If the 9.3 is not there and the 14.3 is there, I love it. Believe it or not, the 14.3 divergence is a little stronger, especially if the 9.3 isn't there. Either way, the safety stop goes in. When we develop that, see that divergence, you decide to get in, that low that makes that divergence, you put your stop just a tick or two underneath the low. If you feel like it's too tight, give yourself a little room, but basically your low is going to be underneath that candle. All right. How long do you want to hold it? That's the magic question. My job is to identify these, get these to you. Typically, I say if you could get in them inside the channel, there will usually be a channel, a pullback. That's the most powerful divergence inside of a channel. If you get into the channel 9 times, 90%, more than 90% of the time, if you have a divergence inside of a channel, that channel will break out. Meaning that pivot will be the low point of the downward channel, and we'll start a new channel to the upside. So at this point, you have one of the best positions. It's up to you how you want to manage it. Remember, our object is to take our money, put it to work, and not let it go sideways too much. So typically we get a divergence. We usually get 5 to 7 day ramp, 5, 7 to 10 days of upside, or at least until we get overbought on the stochastics on the 9.3 and 14.3, and then we tend sometimes to go sideways or even pull back. Really depends. In this case, we kind of went sideways, but overall went higher. Like I said, divergences are quite good that you might even want to just kind of let it run. But that's, I'm here. Please ask me if you want me to give a little feedback on it. If you do find a stock that has a divergence, and there are certain things you want to develop, the channel lines, you want to develop, certain things that we learn about stocks when they break out and what they do. So again, I'm here. Feel free to use me as a board to bounce things off of. All right, so let's get back to our scans. All right, so here we have one that's Palo Alto Networks. Good stock. Now, when you see circles on my things, this is during the when we look at them. Dependent on when we look at these are real time stock calls when we look at them. The Palo Alto Network, you could see identifying a nice downward channel. So this is setting up perfect for a divergence. Hasn't qualified yet, but it has everything going for it. It has the channel back. It has the low. Now we're just waiting for the lower low. So what I would do, in this case, this is what I'm doing. And a couple different things. We're going to take that line down here, right here. See that line? I move it around. Now we know the lower trend line would be great down here. That would take us to the low. It also brings us down to the 200 period moving average. But I'm going to get ready for it. I'm not going to put it exactly down there. I want to put it up here, kind of a double bottom. Well, maybe a little higher, right there. Then I'm going to right click on that. We're going to set the alert. And we're going to set possible divergence HPS. All right. And we're going to OK that. And now that gets set. Alert is not waiting. That alert will come to me when there's a possible divergence there. Or it sets up, and then I can reevaluate it, look at it under the microscope and see if it's a divergence and make a decision there. But it's very close, very close. Palo Alto Networks looks pretty good. So when I see a stock like Palo Alto Networks and it gives me a divergence, then I want to look at some other stocks in that industry. FTNT, let's take a look at Fortinet. Fortinet, very strong, very, very strong stock right now, looking excellent. Not much wrong here. We were in this at 60. We were in this back here, and we sold it on the gap up. I haven't gotten back into it though. I sold at 66 on the gap up, but that's continued to move up. Hasn't given us anything there. But again, that Palo Alto Network does look ripe. All right, here we have Eli Lilly, recognizable channel, nice pullback, holding on our stochastics above the 80. Recent low here, new low here. We need to turn back up to confirm a divergence on this, so we'll put it on the focus list right now and watch it. I write these down. I go through them each day, just a fast look to see if there's any change in the stochastic. As you can see back here, and most time there was a divergence back here. I pointed out, I didn't point this one out. This is a low, lower low, low, higher low. Really nice divergence there. Got a 9.3, and of course, from that point on, even though it was a gap up, it started giving that divergence here on that little gap up in the next couple of days, and it started taking off. But you can definitely see the pullback, the channel, everything that you need to see in these that we look for. Just fits the criteria, fits the formula perfectly. And that's what you have to do. You just got to wait for it to set up. So you can see something similar starting to form here. We just have to make sure it confirms. So I'm going through a lot of the S&P stocks here. And again, I want to bring up some other things because, divergences are rare when they come up. They're our go-to trades, but I want to also point out some technical things that are happening on some other stocks. This is what we call stock rot, when a stock is just continually selling off. Every pop leads to more selling. I call it stock rot. But you can see here, Warner Brothers, Discovery, entertainment, media company. We got a nice pop there, and it's kind of held the 20-period moving average here. This is something this hasn't really done in a while. So we seem to be holding the 20. This is the first time this is holding a long, long time. Just something kind of looks better on this. The 14.3 starts to turn back up. The 9.3 is rotating, but we're holding the 20. It's starting to set up a little bit better. I don't know. I want to throw it out there. We're going to circle it, just kind of to point it out. If you're interested in it, kind of keep an eye on it. It might be something that starts to move, but not officially on it. But I wanted to point that out to you. Oh, that's actually Warner Brothers. Yeah, that's Warner Brothers right there. Again, a lot of these Walgreen boots down here just getting oversold, starting to rotate back up. You do have some that are just on the rotation side of things. It's much easier to be on the right side of a trade if you have the momentum on your side. So this is just starting off on WB Walgreen Boots Alliance. CVS would be a similar stock, but CVS actually has a much better, well, I shouldn't say much better chart. It has a nice base here, and it's actually starting to move up. Actually, there was a divergence here, right here. A little divergence on that September low. We had a low and a higher low right there. I pointed it out with this, and it's right on the lower trend line. It's the first time I really, again, tight channel, very good tight channel going out for 1-2. This is something we do not want to get involved in typically and hold our, put your money and let it just sit there for this long. You want to be able to recognize the divergence and then get in and then look for the breakout. And this might be happening right now. Might be happening. I can only put the circle at real time, so I'm going to put the circle here. CVS, kind of an interesting setup there. I want to write it down, and we'll leave it at that. All right, we're going to leave it at that. Here we have AMCR, Amcor. The packaging containers. Nice little push back up. Had a little pullback. It had a low, kind of a double bottom. Definitely a higher low here. Definitely a higher low. Qualifies as the divergence. It's a quality name. It's in the S&P 500. It's not a very well-known one, but it is there. I want to circle it, as we will put that on there. Now, a lot of people ask, well, when did you know to get in? Well, divergences, because they're longer-term trades, it doesn't really matter the exact entry. What matters is where the pattern breaks down is a low. That way, you want to always catch it close to the divergence low that turned back up, which is not bad. That's an $11 stock. Typically, I try to trade stocks above $40. But hey, AMCR, it does qualify. It doesn't matter, again, what triggers you in. As long as there's a visual divergence, you can actually start to see that. You get in and you keep your stop there. Now, there'll probably be smaller time frames you could manage this on. If you take a look at the hourly, you have an underlying trend line here. And that's, something to watch. case you want to look at that as a to kind of keep you in that trend line. Now, also going into tomorrow, I just was listening to some news, and I want to play you something right now. I want to play you that's something that could be affecting the markets here soon. All right, we're gonna be very careful about this. All right, looking at Intel longer term, just an update on that. I am holding Intel, like the base here. We're back inside the, we'll call this the gap area, which is slowly moving back up. The gap closes up here around 29.31-ish. And again, it's hard to see the tide turn here on Intel with all that bad news that came in. So people starting to get interested in it. Activist investors probably starting to sniff around. That's always a good one, Intel, when it comes down here, and it's based out here for about over a good month, and starting to slowly move up. Now we are overbought a bit, but this is a long-term setup, and right now it does look okay. There's nothing changing on that. All right, take a look at this. Apache here. Apache looking really nice. Now, I'm not a big oil gas sector trader here because the cross currents that can appear in the geopolitical arena with these stocks, and anything can happen. But it is looking like a perfect divergence type of setup. We have the downward channel, we have the low, we have just about a double bottom low, and a possible turn high level rotation back up here. So it looks really good on that. It hasn't really confirmed it yet, but it does look good here. I'm going to circle that. And I'd say a confirmation would be one more candle up and maybe taking out the highs yesterday. I don't know if I would get in this. I'm just, I've always kind of just did my trading on the other sectors, not as much on the gas and oil, unless it's ExxonMobil with a divergence and stuff. But definitely going to mark this off. It's marked off. It has a divergence, very close to a divergence. Even this could be a divergence if you put your stop at the lows of the session here. Very organized. Looks pretty good. Here's Mosaic. Agricultural stock. I think they deal with the potassium and potash or stuff for agriculture. The falling wedge pattern here is a long drawn out falling wedge pattern. You can definitely see the turn back up, very close to being a double bottom divergence. So we call this relative divergence off that trend line. That trend line actually held up here, which has been a good trend line going all the way back to November, December, May, June, July, August. September we broke down through it just a bit. I don't know if there was news or something that caused that breakdown, but if we get back above that, always look for that original trend line to hold, and it's always a buy on the pullback. And that's exactly what happened. Came back down to the trend line, and that was it, and then moved back up. Interesting. I mean, I don't like that the Mosaic there rarely goes up. If we look at this, it's definitely a stock rot for the last 2 years, just straight down. But maybe this is a change. Maybe we're about to change here. As you can see, that low relative to the recent low, the high rotation, definitely something going here on Mosaic. Well, this is a good thing because when you have the oil and gas all lining up the same similar patterns and stuff, they tend to work really well. Again, you can see this is still holding off the lows. The stochastics seem to be coming in. The prices coming in, nice downward channel. A couple things that we like that we're looking at on this. And take a look at that right there. This is kind of a lower trend line. Let's take a look here. Create that parallel trend line here. Yeah, that looks pretty good. It's a nice channel. Just about there. Let's put a alert in here on this. Kind of alert us to a it might not even pull back here. I wouldn't give it much here. Let's actually put the alert on the upside here, because if we start to get that move back up, I think it's going to confirm that divergence. So let's put the set the alert for a possible divergence alert. All right, whatever. One of my favorite stocks is Conagra, CAG. I have 100 shares at 30. I got back here, but if we look back here, didn't mark this off, but if we were looking at the same time, you can see the pullback. And whenever we look for a pullback, we look for that. Well, when does that pullback turn back up, and why does it turn back up? Typically, we look for that pivot divergence, and that's a series of a low and and the lower low. So here we had the low right there, and then you kind of moved up, and then you had the spike down here, a little news. And whenever you have news on these things, that's a good time to look for divergences. And there's a rule on this. If you get a gap down and it starts to move, it's either going to do two things usually when you get news. It's either you're going to start to reverse within 1 or 2 days, possibly 3 days you get the reversal, and then you want to be in it. Or if it doesn't reverse and you start to see drift, it usually drifts down 5 to 7 days before getting a bounce. So if you do get a gap down on a stock and you happen to be on your watch list and you see it turn back up, and then given a high level divergence, that is usually a go-to. That's a very strong signal. In hindsight, it is. Right now, it's not going to help you at this point, but it helps you understanding that gaps are very important. I like finding divergences during the earnings season when you have a gap down. These are usually the best setups. Now, I'm not going to circle that there because we didn't call at the time. Right now, this is at this level, and I'm not going to say anything about this right now. It's not much going on with it, but it is kind of flagging out. All right, here we have another oil and gas stock. Again, those are all setting up together, so we'd actually see a pretty decent divergence on the 14.3. It's just starting to turn back up. I kind of like how we're holding that 20 line here. We have the low here, the lower low there. This is Oxy. We're going to circle it again here because I do like this. Let's mark this one down. I'm going to write this one down. Definitely good. Has a good channel line too. An old channel here, and we extend that out and we get back above it. That's going to be your point that you really want to hold on to. I mean, if we get back above, we're actually going to look for a move back up here, possibly right up to this trend line, and that support line, which is about 56 and change. Definitely getting back above that trend line up here, about 53. It's at 51 right now. So again, take that in consideration. It looks good. Again, rather see a full-fledged divergence, turn back up and just get the momentum shifted on this, and I think we'll be good to go on Occidental Petroleum. I like it that we were in this channel and we broke down in the channel, and now we're in this one. We're going to break back into the channel and then kind of pull back and then move up. Not bad. OXY. So that's along with Apache, some other oil and gas stocks. Here we have Coca-Cola. Perfect setup. I think we called this divergence last week. And a perfect, channel divergence sideways. I think it's going to go this week. Again, we're entering the October phobia. One of the worst months is the worst month out of the year for stocks, and especially in especially election years. But it doesn't mask the fact that this is a textbook level here. Right here, it was low. It was a higher low there. We've been kind of hanging in there pretty good. Again, looks pretty damn good right now on Coca-Cola. Let me see if I can find. I was going to show you something. Let me see. I'm bringing it up. Because we do have an event that is out there, and I just got to find out where my favorites are. Let me pause this a second. So we mentioned this last week. This is about the port strike that's about to start, and what the effects it could be on everything. So this is an update. So I just ran across this, and let's listen to this together.
Okay, everybody, this is update number 4. It's Sunday, right around 12 noon. As of an hour ago, the railroads are starting to not take freight, refrigerated freight. They are starting to leave that right where it sits. They're not taking it for fear that it's going to be left on the train, which is going to basically just take a car and nobody's going to be there to offload it. So the railroads are started to say we're not taking freight. There's still no talks. This strike is going to happen. Biden is not going to step in. He can't step in because the port people are backing Biden. So he cannot step in. The unions did not endorse a candidate, but they did not endorse him or Trump. The workers overwhelmingly endorsed Trump, but the small percentage, the 39% union workers that did support Harris, if they are forced to go back to work by Biden, Harris is going to lose their support because he's basically going to tell them, we don't care, get your ass back to work, and they're not going to do that. So if he does step in, some last minute Hail Mary, Harris will lose the support of 39%, I believe it is. So I will try to keep y'all updated. I'm watching it throughout the day. There again, like I said, it's Sunday. This is right around 12 noon. The news about the railroads came out about an hour ago. So we'll see what happens here. Tomorrow is the last day. Tomorrow night at midnight, 12:01 Tuesday morning, they are to walk off the job. And all products coming into this country is going to stop. So y'all keep following me if you're not following me, and I'll keep you abreast on what's going on. Y'all have a good day.
All right, so, we heard about this last week. I mean, there was a little political stance there. I don't pay attention to that, but I just wanted to get the main fact that the strike is coming out tomorrow, I guess, deadline. I don't know the slant of the political, thing going on there. But I really want to just point out there is a looming event that could halt. And we know what happens when that happens. We went through this with the pandemic and the ports and not bringing in products and the inflation and the products going. So we could be running into a major storm. And I'm keeping out the first word of that, the S storm. Something to put out there and kind of, I don't know, exports. Benny Claus, good question. There's going to be exports too. Exports, imports. I mean, how are you going to get exports out if there's no longshoremen and no dock workers? I would expect the same thing. So, if we should discuss this, during the show, maybe figure out an angle to this and what, is there a short here to be had, or price is going to, what's the play here? So it's going to happen. Looks, according to this guy, looks like it's going to happen. And just something to put out there. So again, Coca-Cola, we'll get back to the stocks. Looks great. It continues to look great as a nice divergence and a possible breakout here and continuation. All right, I'm just looking at here. These are some of the shipping and port industry stocks list. Let's take a look at that a little bit. Just a couple if you want to look at these yourself and do for some further deep dive in this. We got a few of these. I wish the chart would just pop up. Oh, it does. Good. All right, that one's oversold. Let's take it off. Good. I like these charts. Who puts them out? Well, let's take a look at Frontline, by the way, anyway. Frontline, FRO. Interesting. Wow, divergence on this one too. Talk about an interesting setup here. I mean, wow, Johnny, you pull this one out of your hat. Kind of a nice little downward channel. More of a wedge, a higher rotation on the 14.3, a lower low on the price. Everything going for it. I don't know how it's going to be affected by the port strike, or if there is a port strike. How would this be affected? This is gas. It says gas and midstream. So you know what? Might not even be a port stock. But anyway, I'm writing it down. It's a really good divergence. Really nice divergence here. And again, we always circle that when we notice it. So we just circled on that candle. This should give us a nice breakout. It's just starting the momentum. Even as we look back at Nike here, that low and that lower low and that higher low, it gave us a little bounce and we came back down. This is what we call a running divergence, where we have a higher low rotation. The low comes back, it meets the recent low or even goes a little bit lower, but the stochastics maintain that divergence, that angle, really steep, a higher low on that. That's a really good divergence, called a running divergence. And that's usually one of the better divergences because it's the third, we have the low, low, and low. The three bottoms, the three drops to a bottom, plus a divergence. It always works great. Again, kind of a rare event, but when we spot it, it's usually huge. And it was huge off of this. This was right here. I am holding ALB 97 from back here somewhere. Right about here, and it's been kind of a long drawn out process, but you can actually see here we kind of based here. We gapped up, we held at 89. That's been the support resistance line, this 89.10, or excuse me, 89.60 area support and resistance. And it kind of broke down, came back up, tested it, came back up, but we see what happened here. We kind of went sideways. With the stochastics, well, let's take a look at that. I just like to turn back up there. It seems to be coming off of this. This looks pretty good coming out of the base. Just an update on that. All right, there. ConocoPhillips. Again, you can see the low, the lower low, possible higher low. It hasn't turned up yet, but again, what I just mentioned before, I didn't have the mic on, I didn't have the recorder on. This is very similar to the Occidental, Apache. These oil and gas stocks are all setting up the same. They have the nice little downward channel. They have the bottoms, the possible change of rotation. And again, are these going to be affected by the port strikes? I am not sure. I am not sure how that is going to play out, but we will find out this week. Strike is supposed to start Monday night, midnight. So that should be a Tuesday, Wednesday. We'll see where, how much play it gets, how much news it gets. Nice little setup there, ConocoPhillips. This is what I call sneaky divergence. It's where you have that low. You have a little spike lower, but you've already started to turn back up on the stochastics. When you get that spike lower, it turned up. It took out the lows, but it was a little bit higher than this one. Hard to read. It is what it is. If you happen to see a little candle spike down, but it's higher on the rotation, like here, it's usually good. Here, usually good. All right, we got Abbott Labs here. Just pointing out the July divergence. We just have to wait for these. It's just perfect. The future is so bright for us if we have the patience and just continue to do this. I've been doing this for years. We've been sending out the stocks with these HPS setups. Every divergence that we look at, very rarely, very, very rarely does not play out the way we want it to play out, meaning that it's going to go. Now, it's not in a good divergence here, but if I go through a stock, and I'm just scrolling through 500 stocks tonight, I'll go through them until I see something. And if I see something that it registers, it might be a good one. And if not, I'll just pass it. ExxonMobil, I always like watching that one. You can actually see a 1, 2, 3 pattern here, holding the 200 period moving average. This is actually one of the stronger ones. This one typically does give us good divergences. When it does, nice little downward channel. Always looking for it. Always looking for that divergence. Even if it comes back down here, we'd be watching for it. Energy. But a lot of these here are just kind of, when they're not setting up, you don't want to be in a stock just going sideways. You want to be something that's ready to rock. And ready to rock is easy to spot. It's just that we have to do the research. I have to do the research. The video, again, nothing really here showing on the videos. The video is very close back up to the highs. We're back up. We got up close to back up to that 130 level. Had a split back here. Some other stuff going on. It's the overall big stock. And again, you can see me just scrolling through these. What I usually do is a visual scan. Very easy to spot them. A big shout out to Ty yesterday. Ty, I was on doing a coaching call with a trader who wanted to learn how to, set up divergences for swing trades. And I just love that he wanted to do that, because that's the easy money. If you could just wait for these things, we're doing the short-term trading during the day, but when we have these long-term, this is where your position trades got to be taken. Quality names on divergences. We went through them here. You're seeing them live with me. I'm not like just pointing out like, oh, this was a divergence, but it failed. If it's a divergence, it goes up. So we're looking for a good divergence, and if we don't see it, we keep on looking. And again, this is kind of hard. Nothing here that I like. I like the bigger patterns, the big range-bound lower channel line, looking for the bounce. We want to get the moves. We want to not be in something sideways. Here, Yum Brands, beautiful divergence back here. You want to get that big move. Now you can see that there was a low. There was a lower low, right on the higher low on the stochastics. This is where we called this one. Big move up. Just recently called it again. It wasn't a divergence. It was just a good rotation back, and it took off again. That was the better divergence here. There's actually a little divergence back here, a low and a lower, double bottom here, higher rotation, and a big move up. These are better for the buy side. I wouldn't be concentrating on the sell side on a quality name that's making money, or just would have the institution buying and a lot of people behind the stock. You might as well wait for the buy side divergence on this. I'm just going through some of these with you. Trying to go fast, and then I'll pause it and then kind of bring you when we find the next one. I don't like to waste the time on a video. Time is money. Futures are hanging in there. They're kind of hanging in there right now. Still up on the day here. GNRC, Generac, that's the generator play. Almost a flat line double bottom kind of a setup here. It's definitely a relative divergence where the price is hanging around here, but you have a much higher rotation on the 9.3. So that's usually a good sign when you start to see that 9.3 turn up here off of that double bottom. You see that little candle here that came down and kind of met these lows back here, but a much higher rotation there. That is super important. And then you get the next candle, it confirms it, and then you're good. And if it's inside the downward channel, you're usually going to get a pop outside the channel. Hey, fortunate. Right now I'm scanning the S&P 500. I put in the legwork every week. Visual confirmations. I do have scanners, but I'd rather do a visual confirmation because the scanners sometimes miss them. And it's not hard. If we're going to make money, if you want to make money, RPM called this. Hey, RPM, I wrote down your short call on this one. GoDaddy, he said, look at that short on that one. It did drop off. This is very important. Again, swing traders, you have some money to think. You watch the S&P 500, watch the NASDAQ 100, you watch the Dow 30. You can scan through any of those or make your own personal watch list. Like I said, you could, bring up the FinViz market map, and when you get the this is a good tool, a good place to start. The map here. There's a lot of other tools on this, but I kind of get it and then go over to the right hand corner here, or left hand side. And go to your performance. And usually when we're looking for buy-side divergence, we're looking for pullback. So it makes sense to look for maybe a 1 month performance down or a 3 month performance down, so you get those pullbacks. So we'll go to 1 month performance down. And again, Eli Lilly's on the list, and sure enough, Eli Lilly's on my list. Merck, some other ones. Again, what are making the divergences today? ConocoPhillips. The FANG, Occidental Petroleum. These are all on my watch list. And you see how they're all, so that makes sense to do. You can actually start your little scan by looking at some of these sectors that might be bunched up and all in red. You want to have them all bunched up, like here. Oil and gas stocks. All these seem to be lining up to get together. EOG, COP, FANG. And we take a look at those stocks. We'll take a look at we already took a look at COP. Nice pullback. Let's take a EOG. All right, here's the EOG. It's not a divergence, but a decent pullback. OXY. A nice divergence there. Everything. You're right. Nice. And, it will get easier. It becomes the simplicity of it is really important. It's just a visual confirmation. And stick with the quality of the name. The name and the quality of the stock is so important. What happened to my thing? So again, this is just different ways you can start your research if you don't have the time and whatever. It doesn't really matter because I'm doing a research here for you, and we're not going to miss them. Because this is money. And I recognize that, and this is something that if you're going to make money, you don't want to miss this. So if you're serious about it, it's like you gotta play what's gonna make you money. I mean, this is like easy money when you think about it. If we could go back and show you divergences, sell side divergence, buy side divergence. Here, look at this divergence. Every single divergence I will point out with our stochastics and the methodology, the double bottom, the pure divergence, the double bottom divergence, and the relative divergence all work equal. That means the double bottom, higher rotation above the 20, low before first low, underneath the 20. The lower low or double bottom above the 20. It's there and it works. And look at the moves. And then we have the divergence here. It's a little hard one to see because we had the lower low. You actually have to put. I don't really do the sell side divergences. It's just more dangerous, especially in a very bullish market. So we stick to the buy side divergences and we just wait for them. And these are setting up. So I write all these down, knowing that, all right, here we go. We have the downward channel, we have the parallel trend line, we have a 1, 2, 3 pattern. We almost have all we need is a turn up above the 20. It's very close. In the next couple of days, we could get that set up. So I write these down. Write them down, and then maybe on Tuesday or Wednesday, I'll just, I have about 20 stocks here. I'll go through them real fast and see which ones might be triggering, and then we get in them. Now, again, you got to be able to, have the money to trade these, of course. IRAs, these are great positions for IRAs. Good stocks. You want to just stick to the good stocks. Longer positions. On average, I think you could hold these things 10 days up to, a month if you want. But remember, it's not about being in a stock that's going sideways. We want to get a pivot and get that big move. We don't want to be involved in stocks coming back. So if it does get overbought here, we want to take it off. We want to take that stock off if it gets overbought, and then rotate that money that you've just made plus the money that you've taken out. You rotate it into the next setup. you rotate it into the next divergence. And that's how you want to keep this thing rolling. Let's take a look at Johnson & Johnson, Merck, Amgen, because I didn't really look at that. I did see that the Eli Lilly was a nice divergence, so let's take a look at the other ones. What is that? Johnson & Johnson, Merck, and Amgen. J&J. A little pullback. Not a divergence or anything, just a pullback. AMGN. Same thing. Just a decent pullback. It dropped down. Did I check Merck yet? Did I do Merck already? I think no, Merck. There's Merck. Merck a little bit more interesting than that downward channel. And it doesn't have to. You don't have to be, don't make it up. Don't make the trade fit your criteria. Let the criteria work, and let it come to you. Don't say, I'm going to get into. Don't get into something that's not set up. It's so easy to wait. So easy to wait. What do we see here? Tough stock out there. The stock that I'm afraid to get into because I want to save people's lives. I don't want to hurt people. And I know once I get into Boeing, that stock is that plane is going to fall out of the air, and that stock is going to crumble. But anyway, we're in right here, right around the 160 area. It did drift a little bit lower, but what am I seeing here? Do you see something? Do you see this stochastic up here? That 9.3 holding above the 20 line, and that candle came back down right here. I want to circle our candle right now today, yesterday's, or our current candle, because it's starting to look like the momentum is shifting here. It's starting to shift a bit. It's starting to kind of turn back up, even though we had a couple candles that took out the lows. Could be interesting. I'm not a big fan of Boeing. I think there's too many eyeballs on it, too much negativity. It's just, and sometimes the negativity is good because you can buy into that negativity, and it's usually probably the only time you're going to catch a bottom if you buy the fear. That's the only time you are actually going to catch a bottom, is buying the fear. You can't just, catch the run up. It's so you gotta sometimes suck it up and just like, all right, bad news is in, downgrade. I'd love if like Goldman came out tomorrow and downgraded Boeing and it stayed where it was. That would be an ultimate buy signal. Let's continue on. Go back on that for a second. Let me go back. I don't want to make these videos too long because it's just hard to kind of watch. Time is important, but we're just looking at Darden restaurants here. I didn't set that up. There was a nice little divergence back here, and I was just talking about the process of putting your stop underneath the divergence low. So if you recognize the divergence, you're calling a divergence, and you get your position in. And when do you get in your position? Right when you see the turn back up. There's no right or wrong. Sometimes I like to get in on a new high or a higher high, but it's a swing trade, so you have to give it a little time. But the most important thing is seeing that momentum shift back up. So right when I start to see that 9.3 start to turn back up, and I can put that line in here and see that pivot, that's where it is. It could be here, it could be here. But then we go back and we look at the low, because we're not going to be on the low because we don't see that divergence until it starts to move a little up. We put our stop underneath that low, and that's kind of your thing. And if it's not taking it out, you're still valid. I mean, it's still eventually slowly moved up, but you got to pick your battles here. This is a nice downward channel too, and we also remember that was our other big rule. It's very important to get into a divergence while it's inside a downward channel. If we have a divergence 9 times out of 10, it's going to break the channel. If we have a divergence in a downward channel, that is the pivot. That is the low of the channel, and then we're going to start a new channel up. It might take a little longer than you expected, but in reality, when we look back at it, it's always going to be good. It's going to be good. I did add to my Boeing this week. I did add to it because I like it. I like it down here. I'm scared of it, but I like it, and I like that the Boeing is, is that little divergence here. I do like this down here. And I might have seen that divergence too. That's probably, I don't know if I mentioned it was a divergence when we talked about it. I'm fine with the Boeing here. Very fine with it. Now I went back here. Now I have to find where I was. Amazon. I think we're in good position there. Look at that her sign. Close. B. Rolling through these pretty fast. See, if I'm doing my own, typically what I do is I turn off the mic, and then do the research, and then do the watch list, and then send it out. And I go through these pretty fast. And now this is how I go through them usually, just at this speed, And it'll pop. These things pop, You'll see something. I look for the bigger channels, the directional trade, the range of the channel, how thick, And then we start to look at look at Apple with that divergence back then. That was a gap down divergence. That's perfect. So I like to get through these pretty fast. And if they're not there, they're not there. There's been weeks where there's been no divergences and no setups. This week has been pretty good. We got quite a bit here. I might even be good enough to call this because we went over about 386 stocks right now. 386 we scanned through visually together. I did pause it a couple times so I could scan through it so you don't have to wait through it. Constellation Energy, you guys see the divergence here. So a move down. I mean, it doesn't fail, especially with the daily stocks here. It doesn't fail. You have the low, you have the higher low. All right, here it is. And then right when you got that higher low, you started turning back up. You started to get that ramp back up. Now you got overbought. It started kind of getting a little sloppy here, and it didn't do much. Again, every trade that has an entry criteria should have an exit criteria. We want to be in this for the explosive moves that come from divergences. So depending on, you might even take it off here and rotate that money into something better. Energy stocks maybe are not your thing. They're not mine typically. Again, keep in mind that Monday night, midnight, we're going to have the possible strike, the port strike. We'll see what happens with that and how that's affecting the market. That might affect the market, the overall market. We're going to see. I think it could. $415 stocks. Let's see how fast I could go before. If I can see, I see that there. Nothing there. Nothing there. Whoops. What's that? Chart of communication. Not bad. It's just off the 200 period movement. I think we might have looked at that. Nice downward channel. It's not a divergence, but it is a rotation. Palo Alto Networks, we already went through that. We went through a lot of these. I think I'm heading back the other way now. I think I went through my list. All right, we're going to call that a wrap. All right, so let's just go through the final, and this is it. What we have: Palo Alto Networks, PANW, beautiful downward channel. We're going to wait until that 327 area to see if we have a divergence. We have alert down here to kind of let us know. It hasn't set up yet, but it's worth watching. PANW, LY, Eli Lilly, same thing. Beautiful channel, possible turn back up. It might even happen tomorrow. We might get a nice gap up and ready to go. Rock and roll. Eli Lilly, ready to go. WBD here. Warner Brothers, cheap stock, $8. Something about it, holding the 20. Holding the 20. First time holding the 20 in a long time. Suffered from stock rot for 4 or 5 years now. Stock rot. It's like, is it time to come back here? Warner Brothers, Discovery. Is it going to be acquired by someone? Is it cheap? Who knows? CVS Pharmacy. There was a divergence back here. It's slowly making its way. I like it for a pop out of here. There's a gap above. We're up at the gap resistance again. 200 period moving average almost closes that gap. It's almost a perfect close of the gap is where the 200 is. That's at 66, at 61. That's 5 points. CVS on the list. AM, what is that? AM, I did I scribbled it, Amcor. Oh, that's the divergence, I have it, all right. Nice divergence, that looks like a breakout divergence. That looks pretty good. Nice higher low. It's starting to move up a little. It's kind of getting overbought a bit. You know, we'd like to get these things. Remember, I'd like to get the channels. It's not my favorite divergence. I like to have the recognizable channel and be in the channel before we get the breakout. So I probably won't take that one at all. But I did mark it down. Again, you want to get into a channel like this before it breaks out of the channel. This has to turn over. This looks really good. Apache. Occidental Petroleum, OXY. Same thing. And then ConocoPhillips. Same thing. Lower trend lines. These all look good. Coca-Cola. Big stock. You know, great stock. Nice divergence right here. Turning back up. Looks like we're going to break out of the flag too. And last but not least, FRO, front line. And again, another gas oil stock, lower trend line. Divergence. Higher rotation above the 20. Right there. So good setups. But you know what's even better? Is seeing what's out, you know, seeing the results of every other stock we looked at that were divergences and how well they worked. I would say 99% of them were perfect. And you know, that's a wrap on that. All right, so I want to close out the video. Thanks for being with me. I'm going to stick around with you tonight and trade a little. Well, we'll actually watch the markets, and I had to onboard some people onto the Future Trade Alert Network, and then get everything set up going into tomorrow. Let's take a look at the charts, and we'll get. Oh, market's actually pulling back a little. I see you now. All right, maybe we got something. Maybe we got a trade coming up. All right, have a good night, everyone, and I'll see you guys in the markets.